PQR, that's a nice question, a discussion question, so that we can see that you can also talk about this subject that we're busy with. You're provided with a debtor's age analysis of PQR services. Now, let's just stop here for a moment. What is an age analysis? Now, an age analysis, remember what we've said is we will post all the individual entries that we've done with the debtor during the course of the month to his individual debtors account, which is in the debtors ledger. Now, that debtors ledger is basically the detail of the summarized version, which is lying in the general ledger in the debtors control account. Now, when we want to make sure that an outstanding debt is collected, we have to follow up on this on a daily basis. So an age analysis is just purely to list all the debtors that you have in your debtors ledger, plus the total outstanding balance as per ledger, and then you're going to break down that balance in the number of days that balance is outstanding. So that balance for current month transactions, that will be recorded in this column here. Then transactions that were done with him 30 days before the date of the age analysis, that will all be in this column, 60 days, 90 days, and more than 90 days if applicable. Now, obviously, we are not going to be worried about the current section, the current column of debtors who have outstanding balances. Why not? We've just done the business with them. They are still in the process of thinking about when they're going to pay us. So it is very seldom that a debtor who originated in the current period will also be a credit loss potential. Now, 30 days is basically the same thing. Some debtors are paying quicker, some are paying slower, but a guy that's lying in the 30 days, especially if my credit terms are 30 days or 40 days, whatever the case might be, I'm not worried about them either. When they start moving into the 60 days column, I'm getting a little bit more concerned because 60 days is now really becoming quite maybe an issue. 90 days is for sure an issue. So in my debtors department, I would like my debtors clerk to phone on a daily basis all the debtors with outstanding balances in the 60 days column and more, 90 days, 120 days, whatever the case might be. So on a daily basis, we're going to phone them, asking when are they going to pay, what can we do to assist them for the payment, can we come and collect the payment, whatever we have to do. But we want to have our money. So when we look out of a credit losses or an allowance for credit losses perspective, we will basically ignore the 30 days and the current because there should not be a problem there unless some information is that we gain actually proves the contrary. However, 60 days, I would say, maybe start getting a bit jittery. If there's information in the marketplace that shows that there's a potential that the guy is not going to pay, probably only an allowance for credit losses will be needed here. But 90 days and more, you have to consider, must I create an allowance for credit losses or must I write off the outstanding debt? Okay, so that is the purpose of an age analysis. The year end is 31 January 2015 and they're busy with year end adjustments. There is great uncertainty about the write-off and provision of credit losses. Therefore, they have contracted with you to assist them with these calculations and journal entries. They have 3 debtors here, Plasticland, Schultz Limited and AQC CC. They give you the date of the last sale. They give you the balance broken down into the age analysis format. Now, what I want you to do is to write a report in which you briefly explain to management what your conclusion is and why it is your conclusion for each of the above mentioned debtors. For the sake of completeness, also add an addendum to the report setting out the journals to be recorded by PQR services. Clearly show your calculations. Good, now let's have a look at the first one. All entities are registered for VAT except HQCCC. CC is closed corporation. The age analysis provides you with a list of debtors, the last date on which the debtor purchased at PQR services, as well as the age of the debt. After conversation with the client relationship manager, you are aware that Plastic Land is experiencing cash flows. Now, if we look at Plastic Land, the last date of sale was 20 January, year end 31 January, fairly recently. Current 30,000, 30 days 12,500, 60 days 65,000, but look at the 90 days, already 120,000 rand. And they say they have cash flow problems. However, a repayment agreement which does not significantly differ from the original repayment agreement is in place, which also makes provision for charging interest. In the past, Plastic Land was a dedicated payer. The management of Plastic Land has full confidence that their cash flow problems will be at an end at the end of 2015. So what is your feeling? Are we going to make a provision for credit losses, or an allowance for credit losses, in other words, or are we going to write off any credit losses? What is our plan of action? Now, the question wants you to write a report. So you will have the date, 26 January 2015, from whom, if advisor consultants, on what, report on the provision and write-off of potential credit losses in PQR services, and you will start with an introductory paragraph. After an in-depth review of each of the debtors of PQR services, the following was concluded. And then you're going to start with Plastic Land. Now, you're going to state exactly what the problem is in Plastic Land. Number one, they have a significant amount of outstanding debt, 227,500, of which 120,000, nearly half of it, is lying in the 90 days period. The oldest debt being 90 days. The age and the size of the oldest debt immediately raises a red flag. The fact that PQR Services continues to trade with Plastic Land, and the fact that the repayment agreement is in place, the repayment history as well as the future plans of recovering from the cash flow problems gives enough assurance that the debt has not yet gone bad and will probably be repaid in full. Therefore, we advise that no write-off or allowance for credit losses needs to be made. Now, I bet my bottom dollar that half of you have said that at least an allowance for credit losses must be made. But guys, look at this. Look at this now clearly and analytically. As soon as 11 days before year end, we've done another transaction with them for 30,000 rand. It's not an immaterial amount of money. Then if you look at everything, we know that they're experiencing cash flow problems. But they come to us and they say, let's restructure our repayment terms. And then they've restructured the repayment terms, but they were not given a lot of extra leeway in the new terms because they say the new ones does not significantly differ from the original repayment agreement. So it's more or less the same thing. So they have to then play the catch-up game as quickly as possible, not only to service the current debt, but also to repay the old debt. They are also happy that PQR is going to charge interest on them. So the 120,000 rand and the 65,000 rand that needs to be repaid is not only going to be the capital amounts, but they are quite willing to pay interest on the capital amount. Plastic Land was always a dedicated payer. Guys, COVID-19 happened last year. A lot of entities who were financially sound in the past suddenly experienced a lot of problems. Now, if I am going to insist on payments or allowances or write-off credit losses or legal proceedings against these kind of debtors, I'm a fool. I should rather preserve my good customers and give them some leeway to catch up in settling their outstanding debt. They've written or they've already signed a new agreement, a new contract. They are happy with interest payments. And then the management of Plastic Land had to provide proof that their cash flow problems will be shortly something of the past. So instead of killing a guy who in the future potentially can actually be a good customer once more and make payments regularly to you like always in the past, instead of killing this guy and institute legal proceedings against him, why don't just give him a little bit of leeway? He is 100% in agreement with the leeway that you want to give. He's 100% in agreement with the fact you're going to charge interest. And for that matter, you are going to recover the full 227,500 Rand. Maybe not in the time period that you wanted to, but eventually they will come to the party and they're going to prepay you. So it is not a bad debt. There's no credit losses that actually needs to be written off. And then I think they have given us enough assurance that we don't have to create an allowance for credit losses either. Schultz Limited. Now look at Schultz. The last day of a transaction with them was on the 5th of November. Now that's a couple of months ago, and since that date, there was no new transactions concluded with them, and in the 90 days column, they owe us 55,000 Rand. Now, additional information that we got hold of said that they caused quite a stir in the news. Due to the exposure of alleged fraud, Schultz Limited began to lose more and more customers, and the share price has significantly dropped. So there is red flags all around. There is very little confidence in the market that Schultz Limited will recover, and they've already started with the retrenchment of staff. So market expectations is that they are in serious trouble. And they have confirmed that fact by taking actions like retrenching of staff. That is a clear indication that everything is not going well back at home. There was also an article in the newspaper. Guys, you can't print the articles left, right, and center. If there was no truth in this newspaper article, Schultz could have sued the newspaper. And so obviously the newspaper won't take any chances if they publish an article and they can't prove the sources is a reliable source on which the article is based. And they said there that Schultz Limited applied for liquidation. So I think you can fairly accept the fact that that is the truth. Otherwise, wrongful allegations like that can cost the newspaper a lot of money. So if they actually state that there is a liquidation process already in place, I don't think there's a turnaround point for Schultz anymore. After you've inspected Schultz Limited's latest financial statements, you believe that after the loans from financial institutions are repaid, there will be no money left to pay their creditors. Now remember, these loans from financial institutions are most probably secured loans. So they gave some of their assets as security for those loans, so those loans are having a preferential right when it comes to repayment of outstanding debt. So they will receive their repayment first, and if there's any money left at the end of the day, then people like the creditors, which is unsecured debt, will receive something. But I think it's fairly certain that they're not going to receive anything or everything, if anything at all. The management of PQR Services would like to not write off the debt just yet. Their preference would be to give the company another 3 months and then re-evaluate. Now, I agree with you if you made a comment that for what wait for another 3 months? The writing is on the wall. These guys are belly up. They're not going to make it. They're not going to salvage the operation. So why give them another 3 months? Okay, now think carefully. What would you then propose? You would propose a written off of credit losses. So what will happen? I'm going to debit an expense account credit losses with outstanding debt of, what is the amount, 55,000 Rand, the VAT exclusive amount. I'm going to claim the VAT and I'm going to credit then the debtors account with the 55,000 Rand. So I will have, if we ignore that, I would have had an expense of 55,000 Rand and I would have reduced my asset with 55,000 Rand. What would have happened if we have created an allowance for credit losses? Now, we would have debited an expense account once more with 55,000 Rand, and we would have credited an allowance for credit losses account with 55,000 Rand. In our statement of financial position, what are we going to show for outstanding debt for Schultz? Still nothing. You're going to split the amounts though. You will still show the outstanding debt of 55,000 Rand, and then you're going to say less allowance for credit losses, 55,000 Rand. But at the end of the day, what is the net debtor? 0. So can you see that by writing it off as a credit loss, or to provide it as an allowance for credit loss in this year, I'm going to achieve exactly the same result. So if my first choice will be to write off the debt straight away as a credit loss, but I will also settle with the management of PQR services not to write off the debt as yet at year end, but then if they don't write off the debt, I want to see an allowance for credit losses for the full amount. So let's see. Due to the age of the debt and the current market conditions and indications, it's our opinion that Schultz Limited will not be able to repay their debt. The fact that the company filed for liquidation and carry the burden of a large amount of debt to financial institutions indicate that the company will most probably not make any repayments to PQR services. We duly note management's preference not to write off the debt, but suggest that it will be prudent to do so. At the very least, an allowance for credit losses needs to be created. Therefore, our recommendation is to write off the credit loss in full, or if management so desires, at least create an allowance for credit losses for the full amount. I think therefore outstanding amount. Great. So if we go back then here, the last one, HQC, you see that the last time we've done a transaction with them was on the 9th of December, 22,900. Nothing thereafter, but 22,900 is still in the 30 days column, so it's a very recent date. They are not registered for VAT, but that doesn't say anything. HQ, that only tells you that the turnover is less than R1 million per annum, so it's not a big entity. HQC has never done business with PQR before. The application for credit was carefully considered, and after a credit risk assessment was carried out, it was decided to extend credit to the CC. HQC is, however, a new business, still establishing a proper foothold, and there are whispers that a contract acquired by them fell through. Therefore, there is a possibility that the debtor will not be able to settle the debt. Now, you have to read carefully here. Is there concrete evidence that HQC is not going to repay the debt? Read carefully. Is there concrete evidence that they will not be able to repay their debt? No. There is whispers. If you want to borrow your ears or lend your ears out for gossip, I've got bad news for you. You are not going to make it in life. So there's a lot of gossip going around. And then it is a fact that even if they did not get this contract, or if they lost the contract, it's not to say that this is the end of the story. You don't know what's happening there. You don't know whether they are in negotiations of signing new contracts or not. And then, just recently, this is a new client, so just recently, PQR carefully considered and done a credit risk assessment of HQC. Not long ago. No, the other day. So are things going to change that significant from the date that the credit assessment was made to now, that suddenly this guy won't be able to repay his 22,900 rand. I doubt it very much, guys. If it happened 6 months, 9 months, a year ago, maybe, but not as recent as 30 days ago. So therefore, I don't think they need to do anything. Since there is no past record of HQ's repayment to indicate future repayments, and that the rumours that the contract fell through, there is a possibility that the CCC will not be able to make the repayment, and that is purely based on gossip. However, the debt has not yet aged significantly, and there is no other evidence but gossip to support the fact that the debt has gone bad. Therefore, we do not deem it necessary to write the debt off as yet. The credit risk was also carefully considered and assessed and was granted, indicating that an informed decision was made in extending the credit. In our opinion, the debt does not need to be written off or provided for. Rumours is the same thing as gossip, and rumours doesn't mean that there's any concrete evidence. Good, and then I want you to write an addendum. I think that's the end of the story. They want you to write an addendum to show them what journal entries you will pass. Now remember, you said for Plastic Land, nothing. For QC or O, nothing. It's only for Schultz Limited with the 55,000 that we will consider, that we want to write off something, because they are for sure not going to make it. So for Plastic Land, no entry. HQC, no entry. Now Schultz Limited, you have an option 1 and option 2. Option 1 is if you write off the full 55,000 as a credit loss. So the VAT exclusive amount will go to credit losses. I can claim the VAT, and I'm going to credit the debtors control with 55,000. Option 2 is where you're going to create an allowance for credit losses. Again, an expense account. Credit losses debit 48,000. Credit allowance for credit losses 48,246. So you will achieve exactly the same in both instances. In this instance here, obviously you cannot claim the VAT there because the debt hasn't been written off. But as soon as you're going to write off the debt, and that for sure is going to happen in the next 3 months, you will claim the VAT then. So it's either option 1 or option 2.